$47 billion. Not a typo. That is the peak valuation of a company that didn't invent a new microchip, didn't cure a disease, and didn't revolutionize space travel. They rented office space, and then they sublet it. That's it. Yet, in the span of a few short years, this company convinced the smartest investors on Wall Street to hand over billions of dollars, creating a financial black hole that swallowed fortunes, destroyed careers, and ultimately culminated in one of the most spectacular, humiliating corporate bankruptcies in modern history. This is the story of WeWork, a masterclass in mass delusion, and the man who orchestrated the $47 billion collapse that, supposedly, no one saw coming. But to understand the crash, you have to understand the spell. WeWork was founded in 2010 by Adam Neumann and Miguel McKelvey. They didn't invent co-working. Adam Neumann, a charismatic, towering figure with flowing hair and the unshakable confidence of a cult leader, realized something profound. Millennials didn't just want a desk, they wanted an identity. They wanted community. They wanted free craft beer on tap, neon signs that said hustle harder, and the illusion that they were part of a movement. Neumann wasn't selling real estate, he was selling a feeling. He famously claimed WeWork's mission wasn't to rent desks, but to elevate the world's consciousness. And investors ate it up. Because here is the fundamental trick Neumann pulled off. He convinced the world that WeWork was a technology company. Real estate companies are valued on actual profits, based on the slow, steady accumulation of rent. Tech companies are valued on growth, vision, and scale. If WeWork was a tech company, the normal rules of finance simply did not apply. And nobody bought into this tech utopia vision harder than Masayoshi Son, the eccentric billionaire head of SoftBank and the $100 billion Vision Fund. Legend has it that Masa Son took a brief tour of a WeWork space, got into his car with Neumann, and sketched out a $4.4 billion investment on an iPad during a 45-minute drive. Son reportedly told Neumann that his only problem was that he wasn't crazy enough. It was like pouring gasoline on a bonfire. Armed with SoftBank's billions, WeWork went on a blitzscaling rampage that defied all economic logic. They expanded to hundreds of locations across the globe, signing massive, long-term commercial leases for millions of square feet of premium real estate. They would then renovate these spaces with glass walls, kombucha on tap, and arcade games, turning around and renting them out to freelancers and startups on flexible, month-to-month terms. It is the classic definition of a mismatch. WeWork was locked into paying billions in rent over 10 to 15 years, while their income relied on tenants who could cancel their memberships with 30 days' notice. If an economic downturn hit, the freelancers would vanish, but the rent bills would remain. It was a ticking time bomb disguised as a unicorn. But during the boom years, nobody cared about the bomb. The cheap money era meant growth was the only metric that mattered. Neumann used WeWork's cash as his personal piggy bank. The stories of excess are legendary. Mandatory tequila shots at morning meetings, private concerts by massive pop stars, a $60 million Gulfstream jet. Neumann even trademarked the word "we" through a separate holding company he owned, and then sold the rights to use that word back to WeWork for nearly $6 million. It was corporate governance at its absolute worst, a feudal kingdom masquerading as a startup. The illusion held until the summer of 2019. WeWork was burning through cash at a terrifying rate, and they needed more. To get it, they decided to go public. They filed their S-1 document with the Securities and Exchange Commission. In the financial world, an S-1 is supposed to be a sober, heavily audited look at a company's inner workings. WeWork's S-1 was a masterpiece of absurdity. It began with a dedication to the energy of we, greater than any one of us, but inside all of us. It mentioned the word community over 150 times. But worse than the new age jargon were the numbers. The filing revealed staggering, unbelievable losses. In 2018 alone, WeWork lost $1.9 billion on $2.5 billion in revenue. They were losing almost $1 for every dollar they made. To hide this, they invented a completely nonsensical financial metric called community-adjusted EBITDA, which basically meant our profits if you ignore all of our expenses. Wall Street took one look at the S1 and collectively recoiled in horror. The emperors of co-working had absolutely no clothes. The illusion evaporated overnight. Analysts tore into the absurd valuation. Public investors refused to touch the stock. The planned IPO, which was supposed to validate the $47 billion price tag, had to be abruptly canceled. It wasn't just a failure. It was a humiliation. In a matter of weeks, the valuation collapsed from $47 billion down to around $10 billion and then kept falling. WeWork was suddenly facing an immediate cash crunch. Without the IPO money, they couldn't pay their landlords. The house of cards was collapsing. In a desperate bid to save his investment, Masayoshi Son orchestrated a bailout. But the price was Adam Neumann's head. The charismatic founder who had built the empire was unceremoniously pushed out of the CEO role. But here is the ultimate insult. Neumann didn't leave empty-handed. To get him to walk away and relinquish his supervoting shares, SoftBank handed him a golden parachute worth over $1 billion. The employees who had worked 80-hour weeks for equity saw their stock options become worthless. But the architect of the disaster walked away a billionaire. WeWork tried to right the ship. They brought in new, boring, traditional real estate executives. They sold off the wave pools and the private jet. They tried to renegotiate their crushing lease obligations. Then, the pandemic hit. Offices emptied out globally. The very concept of shared, crowded workspaces became a public health hazard. For a company whose entire model relied on packing as many people as possible into a single room, it was an existential crisis. But the damage was terminal. By November 2023, the inevitable finally happened. WeWork filed for Chapter 11 bankruptcy. The $47 billion giant was dead. A time when capital was so cheap, and investors were so desperate for the next big thing, that they willingly abandoned basic math in favor of a charismatic pitchman with a good haircut and a buzzword-heavy slide deck. It wasn't that no one saw the collapse coming, it's that everyone who could have stopped it was making too much money pretending the illusion was real. The WeWork disaster will be taught in business schools for decades. A permanent reminder that you cannot bend the laws of economics forever, and that a company built entirely on hype is always just one bad document away from total annihilation.